Right, order of battle, we're now going to look at some on-chain metrics. So, Harry.
Get ready to ride the crypto wave with the master navigator himself. Meet the head realistic trader mentor, the beacon, guiding you through the cryptocurrency Wild West. In weekly sessions, he not only keeps you ahead of the curve, but spills the beans on where he's putting his own money. He's a Call of Duty conqueror, taking on enemies and giving Siam a run for his money. But today, he's here to prep you for the bull markets. Get ready to capitalize with the one and only, our guide through the crypto wilderness, Harry Harrigan.
So I came up with this idea at the last CUDL, and I genuinely thought we'd need to talk about this, because we'd be getting close to a blow off top. And I was honestly, let's look at it this way. Of all the questions that people ask, whether it DMs, YouTube videos, whatever, Twitter, the one that consistently comes up is, when should we get out? And there's this argument, should it be time-based, should it be price-based, or whatever. For those that have sort of tuned in on Tuesday nights, and appreciate that you do, I've harked on for ages about April 2021. The 64K that we got April 2021 was the true Bitcoin top for that cycle. I appreciate it doesn't work with a 4-year cycle, but I would argue that what happened in November was a failed experiment from a bunch of scummy con artists, Sam Bankman-Fried, Duke One, everyone else. It just elevated that price up, and it just peaked above 64K for about 4 or 5 days, got to 69K and then crashed back down. So a lot of the on-chain metrics are going to agree with that statement. Not that they're scumbags, we all know that, but that April was probably the top. So that's what we're going with on this. As I said, I've really just been trying to cherry pick a lot of the on-chain analysis that people talk about on the likes of Twitter, YouTube, within Discord. I've been that sad that I have run sort of advanced searches to try and find what people have associated with the term Bitcoin top or blow off top, etc. And it actually came back with over 30. I'm not going to do 30, I promise. But it is a little bit of death by on-chain. So I apologize if you don't like looking at charts, but we are a trading group, so hopefully that's not going to be the case. And also don't feel that you need to write them down. There is a list at the end with my scoring, and also that's available on Discord. So we'll go from there. I'm going to start it off nice and easy. The Pi Cycle. We don't have a laser as well, so you're going to be a lot of me walking around pointing things out, so apologies there. But Pi Cycle, most of you probably would have heard of this, most of you would have seen it, but it's probably a good one to start with and ease us into. So created in 2019 by a gentleman called Peter Swift. 2019 and Peter Swift are going to come back onto later, so just bear those ones in mind. In terms of what it is, and I'm going to keep descriptions light, okay? We're not here to actually learn how they're created, but just try and give a very generalized view on them. So if they're not 100% accurate, apologies for those that are geeking in the room and know how they really work. I'm just trying to dumb it down. But we're just taking two moving averages, so 350 and the 111, and they have to be on the daily when you're doing the Pi chart, Pi cycle, sorry. Now, the 350 is what a lot of people don't realize, is that the price of the 350 is multiplied, it's doubled, okay? Not the days, it's not over 700 days, it's whatever the price was at that time is doubled. And it's called pi because if you divide 350 by 111, it gets close to pi, which is about as accurate as crypto bros can get these days. But the real kicker is Peter believes that when those two lines cross, it signifies the top for Bitcoin plus or minus 3 days. So let's run the data. And this is what it looks like. And okay, it's all right. Most of these charts are taken from Bitcoin Magazine Pro. It is free, so you can go on there, you can have a look at all these charts yourself. It used to be called Look Into Bitcoin, and they got bought out, so this is where it is. So no pointer. However, let's try and talk through what we've got. We've got the black, which is Bitcoin price. I mean, I feel like as crypto people, you could see that on any background, you'd know that was just the Bitcoin history. I feel like I can. Chart expert here. Then we've got the, let me just make sure, the yellow or orange, that's the 111 daily moving average. The green is the 350 times 2. And you can see that just sort of like snakes along. Doesn't really matter. We're not interested in the price of that. What we are interested in is where they cross. And you can see there are these red lines. Okay, and I'm going to mention these dates, but this chart is a perfect time to do it. So we know we had a bull market in 2011, which is this one. 2011, sorry, one on the far left. 2013, we had two tops, which is where the next two lines are. End of 2017, 2021. Okay, so all looking pretty good. We just zoom in a bit closer, and you can kind of see actually the 2013 really is sort of picking the crosses out here. I wish I had a laser. And all we're doing, as I say, is we're just waiting for the orange line to cross above the green. And it's done. It wasn't quite at the top. It was a day off that time. And it was 2 days late on the one at the end of 2013, beginning of 2014. 2017, it was on the day. Absolutely spot on. Now we get to where it's interesting. This thing was actually only created in 2019. So everything I've just said is absolute bollocks. Because it could have been retrofitted. You know, he could have kept on changing it, going, oh, I'm going to start with 110, that doesn't work, I'll go 112, that doesn't work, oh, 111, whatever. And there was a lot of doubt about whether or not the Pi cycle, oh, a laser, thank you. Perfect, thank you very much. Yep, okay, thank you. And so a lot of people called out Peter Swift from 2019, going, you know, let's see if it actually works in 2021. I was one of them myself. And as we were getting to 2021, they were getting closer and closer and closer. But sentiment at the time was Bitcoin's going to 100K. So when this thing crossed at 64,000, nobody believed him that it was the top. But actually, what happened immediately afterwards, it dropped. And it crossed to the day. The day those two crossed, it hit 64K. Perfect indicator that it's actually gone and worked. So what we have seen is, yes, he may well have retrospectively done it in the past, but on the first live opportunity, it works. So far, we can say 2011, 2 in 2013, not a good time that Josh is already yawning, 1 in 2017, 1 in 2021. So we've had 5 indications that this one works, which puts it in good stead for where it's going to go. What is interesting is if you actually go onto this website, it gives an estimation of where we think it's going to cross at the moment. Right down at the edge there, but being a Boy Scout, I've zoomed that in for you. And it actually looks like, if everything goes as we currently see it, 1 year tomorrow, we'll see a cross. Now that is me, I could have come up with any date, because that's assuming that those two lines continue on their current path, which is highly unlikely. You know, we get a spike in the price, and that orange line is going to shift upwards, bringing the time to the left. So what we can say is, we're still some way off. And we can see that by the distance between the two. The prices there, I would give those with a pinch of salt. And the reason is, no time in the previous 5 attempts when they've crossed has the cross occurred above the price. Actually, the cross has always occurred below. So this is kind of indicating that the price should be above 260,000. So science predictions might well be coming true. We're going to look, I wrote those down as soon as you said them, because I'm going to talk about that quite a bit today. Apologies. Okay, that's Pi cycle. Puell multiple. Most of you, again, would have seen this, but you may not know what it is or what it was called. This one here is all about Bitcoin issuance. It's basically how much of it has been mined and sort of how that's worked across the, well, 365 days. But there is a formula, and that is the daily Bitcoin issuance, so whatever has been mined that day times by the current price, divided by the previous 365 days of that same equation, daily issuance. And that's all you really need to know. I'd dumb it down even further and say, actually, there's only 2 things you need to know, whether it's high or it's low. And if you want to have it in their figure, if it's greater than 3.5, we're potentially at a market top. If it's lower than 0.5, potentially we're accumulating, we're at the bottom of a bear market. This is what it looks like. So we've got the price. We've got this squiggly orange line, which is what we are interested in. And then very nicely, they put those 2 ranges, or the bottom of the ranges, in those boxes. So we've got the red and the green. This is going to be a similar color palette for most of the charts. Red, overheated, green is quite cool. That's all you really need to know from those. And what we can see is 2011, 2013 twice, 2017, spiked massively into the red zone. It breached that 3.5, right at the time when the tops occurred. So again, it doesn't give us an exact date on this occasion, but it does give us an indication. Now 2021, if I can get there, it's hard to see, but it just dipped into it, just. And again, people didn't believe it because, well, wait a second, we've hardly breached into it. And it's also, I mean, we didn't know at the time, but that's February. It's a little bit early. It did go slightly higher, but it did actually get into that zone to give us the warning. What it does do, and I know it's not really talking about it, is, I can't, it's even seen, there we go. It's pretty darn good at spotting bottoms. Regardless of what you might think about tops, it certainly is very good at spotting bottoms. But right now, we're in no man's land. We're right in the middle. So you don't really, well, we want to look at it, but there's no indication either way that this market cycle is either over because it's overheated or we're restarting because it's cooling down. The one thing that does worry me is this. Because each time, the spikes have got less and less. And there's one thing that on-chain analysis analyzers love to do is to move the goalposts. And so before we know the next cycle, they might drop it from 3.5 to 3, just to sort of curve fit the result. So we need to bear that in mind. Now this could be because the amount that's being issued each cycle, each day, is reducing. So that is a very logical way of how it could be doing it. So we're never going to see those huge spikes again. But for me, it just sort of calls into question whether or not we're really going to see it. And the other thing that just is of interest is just what happened. So this is March 2024. That moved from 40K to 70K. That hit that trend line, and then we've cooled off from it. So just need to bear in mind where that one is. But for me, I'm not sure that this one is really something that I'm going to be hanging my hat on going into the future, unless we see a very clear spike into the red zone. I'll give the scoring as I said at the end. The MVRV Z-score sounds incredibly complicated, but it honestly isn't. And it's just used to try and determine whether Bitcoin is overvalued or undervalued versus its fair value. And for those of you that follow the power law, you've probably heard about the fair value. If you haven't, we're going to talk about the power law a bit later on. But market value, which is the MV part of it, is effectively market cap. It's just Bitcoin's price times by circulating supply. That's it. And the realized value is just the price of Bitcoin the last time it was moved. And then that's averaged out times by circulating supply. And that gives, you'll see in the next chart, a nice smooth curve to the price action. And then the Z-score, even I don't really understand this one. They apply some form of standard deviation to it. When I asked ChatGPT, I just got lost, so I didn't bother going into it. But there is a standard deviation that effectively shows the extremes of the data between those two figures. And it gives you something like this. And unfortunately, these all start to look quite similar. So I understand that you might get confused by some of these, but the data is slightly different. But again, 2011, 2013 twice, 2017, 2021. What we see exactly as before is it spikes into the reds, and these spikes are giving us clues that we are getting into an overheated, overbought market, and should be some cause for concern. The blue line, that's the realized value. You can see how it's just a lot smoother, because it's taking into account long-term holders that don't move it that often, times by circulating supply. And actually, again, this gives us a good indication of bottoming sort of patterns, and anywhere it dips below that, it's probably a good buying season. And again, down here, although we're not looking at Bitcoin bottoms, it's actually looking pretty good in terms of picking out where those dips below the 200 moving, sorry, the 200 is. It's not even 200, the realized cap, sorry, I'm getting confused with another one, is there. But going back to the MVRV score, I think this is actually a fairly good indication of where we are. Now, if you want to actually zoom in on it, the bottom of the red area is +7. So anything above +7 marks a potential top. And notice how in this one, it spikes up and comes immediately back down. So it is more of a knee-jerk reaction. So if you do see it go in there, it's probably a time to start looking at some of the other data and deciding whether or not it is time to enact your exit plans, as I'm sure you've all got written down by now. The one thing I would say that maybe just not necessarily discredits it, it's 2021. Again, this peaked into there only just, but the date was February, and the amount was 58K. So it did actually climb up a little bit higher, even though this fell away. So it's not exactly marking the top, but it is getting, it was fairly close. It only got to 64, so it's about another 10% added on top of it. So if not a full exit, could at least give you some idea of when you want to exit. New pools. So net unrealized profit or loss. So this again is using market value and realized value, which we've discussed. But what we're doing here is we're subtracting the realized value from the market value. So that is, going to give us an idea of what the profit and loss could be, because it hasn't actually been realized yet, hence the unrealized. We then use that and divide that by market cap. And the idea is if the market cap is rising faster than profit taken, then we are overheated because people aren't selling quick enough. And this one, it looks different, finally, one that looks slightly different. So we've got Bitcoin price again in black. We've got the new pool, or the net unrealized profit and loss in blue. And then we've got these zones here. And it's a lot easier to understand here because we've got greed, denial, anxiety, fear, or capitulation. And the other side of that is hope, optimism, and belief, and euphoria. But any time it has dipped into euphoria, greed has marked a market top. So again, 2011, there's going to be a theme to this, twice in 2013, 2017, and even in 2021, we got there. That's around about 75% on the chart. So another good indication of where it is. So actually, there's plenty of on-chain data at the moment, if we can be bothered to follow it, that suggests we can spot market tops. And I think this is, for me, kind of thing, we get so into the weeds, particularly with trading, everything else. We're looking on the hourly, the 4 hourly, the daily. I'm the worst at this, I'm 15 minutes, 5 minutes sometimes. That actually taking a step back and just looking at this data, if you're just those chilled people that can just hodl, this is kind of the charts that you really need to be studying at. And right now, we're still around about 60%. So if we're to believe this, as well as some of the other on-chain, we've still got plenty of time to go until we get to the top, regardless of how sentiment was last week. I know it was pretty dire then. Getting into ones that maybe you've not heard of, and they are getting a little bit more complicated. Delta cap, so that's is realized cap versus, minus the average cap, and the average cap being the market cap divided by the age of the market. And I don't know why, it doesn't explain why, but you take the delta cap and you times it by 7. Who knows? But what I do know is that looks pretty sexy, because 2011 hits the top perfectly, 2013 hits the top perfectly, 2018, 2021. So actually this one here, first face value, looks like something we should know a lot more about, because this seems to have accurately picked the tops until we investigate this. And I think when people do talk about the delta top on Twitter and YouTube and that, they probably misleadingly just show that previous one where everything looks quite close. But when you zoom in, 2021, there's a marked difference there, because I couldn't get to the exact day just because my hand was shaking too much. But when the price was at 23,000, we know the market top was 64,000. It's saying the delta top was 105. Well, the previous times, it hit the market price every single time. This is almost double the value difference. So we're actually seeing that this is starting to fall away. And again, this is a metric that was made, or thought of, after the 2017 top, and it's probably not coming into credibility like it had done previously. RHODL. So this is comparing the wealth held by short-term holders versus long-term holders. So smart money versus dumb money. And we're really looking at a realized value of tokens, Bitcoin, 1 week old versus that is 1 to 2 years old. I understand why they do the 1 week, very short-term movement. The 1 to 2 is a bit of an interesting one with Bitcoin, just because of what it's now becoming, that store of value. Hell, I hold some Bitcoin that are 4 or 5 years old, and I certainly wouldn't consider myself smart in terms of how I work in crypto. So maybe we need to take that with a pinch of salt, but the idea behind it is the higher the RHODL, the more new buyers. So the more new buyers, there's more dumb money, likely means that we're getting close to a market top or it's overheated. And the low RHODL, it's pretty much just the old guard that's staying in, and we're just accumulating more Bitcoin. And we start to have a look at things a bit like this again. So similar kind of looking chart, you see where Bitcoin is, we've got the red and the green boxes, and we've got the orange. And again, RHODL's looking pretty good. 2011, 2013, okay, only one of them this time, 2014 in quite nicely, 2018, and then, starts to fall apart here. Something's gone wrong, because we haven't quite made it into that zone. And so for me, I think this is one of the more popular charts, but this is not one that I would be using for a market top. Because whilst it worked previously in the past, we've actually got 2 instances where we didn't get into the zone in either time for it to actually give us that sell signal that we were looking for. Again, great for market bottoms, but not working so well for the tops. What is even more worrying is this. So this again is March, is it? No, that's the Trump pumps. That's December 24. It's got to the same level, November. It's got to the same levels that we had in, was it 2021? So either this is the first indication that we're getting that actually this cycle's over, which, you know, we should have a look at the data and just, you know, make sure that we check ourselves each time, and we're not going to get any higher than where we currently are, or this is just proving that this one's broken. So I'm only going to be looking at this one just to see whether or not, this will only have credibility, shall I say, if unfortunately 108,000 is the top, which none of us in this room want that to happen yet, but none of us wanted 64,000 to be the top in 2021, so let's bear that one in mind. Getting on to a few more interesting ones now. There's a family for coin days destroyed. There's a few of these, and this only brought to my attention probably last year. Bijan used to go on about this one quite a lot, but looking into it, this is actually one of the most oldest on-chain metrics out there, and it's first talked about in 2011. And all we're doing with coin day destroyed is number of coins, in this instance Bitcoin, times by the day since the last coin was moved. So a few Janet and John examples here. If you have 5 BTC that hasn't moved for 100 days, it's 500 coin days. 10 BTC that have only moved for 1 day, it's 10. Or 0.1 BTC that hasn't moved for 100 days is 10 coin days. And we're looking for when that moves, or the destroying of those. And the idea behind it, again, is long-term investors that have large coin destroyed days are smart. They know what the market is doing. So when they move and those coins get destroyed, or those coin days get destroyed, something must be up. That's the idea behind it. But the chart, this looks like an absolute mess. There's no discernible data from the raw data there. I can't see any sort of pattern that's giving me any clue. So what they do is they apply a moving average to it. And there's 2, there's a 90-day or a 30-day. They kind of say the same picture. And here it is. And again, actually, on first examination, it does look pretty good. 2011, 2013, 2 spikes up. 2017 is looking pretty good. Interesting turn of events at the end of 2018, which we'll talk about in a moment. 2021 looking good, and then we've got some activity the back end of in 2024. And so, well, this is the 30. Oh, that's the 30-day, just so you can kind of see similar. Obviously, everything's a bit tighter because it's on a shorter time frame, but with the spikes are still there. But I'll just go back to this one. I think this is one that we see the most. Last year, this was talked about a lot in March because this happened. What we started to see, are we at a market top? The answer, spoiler alert, is no, because that got to 70K and then we went to 108. So we're already probably negating that. But just think for a second about what actually happened in March 2024, or from January to March 2024 last year. We had the ETFs. But what were the ETFs doing? They were buying, and who were they buying from? The vast majority were buying initially from Grayscale. So Grayscale went from 600,000 Bitcoin to about 280,000 Bitcoin over the space of 6 months. But they'd been buying those for years. So their coin day destroyed is going to be off the chart. So when they started selling, it just looked like smart money was dumping their Bitcoin, but they were dumping it to other ETFs. So I think that the ETFs have kind of skewed this as a metric. Maybe it'll settle back down as ETFs calm down in buying and BlackRock fill their bags. But right now, really is not looking like this is helping us, because the spike up is kind of similar to where we were in 2021. I have no evidence to suggest that it is because of Grayscale, but that just makes sense. You can't sell 300,000 Bitcoin that you've held for 7 years and not create a huge amount of coin destroyed days. But it does call into question whether or not we can use this one going forward. There's another one, which is a supplier adjusted coin days destroyed. And that's basically just taking the coin day destroyed, but then dividing it by the actual number of tokens in circulation. So It doesn't really give you much of a different picture. I'm just bringing it up there because when you go on to Bitcoin Magazine Pro, if you do, you'll see there's two, and this is what it looks like. It still has the spikes, and it still has this here, which I didn't talk about on the last slide. So this is the end of 2018. I don't know how many of you in the room were in the market at the end of 2018 when we dropped from 6,000 to 3,100. That was probably, for me, the biggest capitulation event that I'd experienced in crypto. Worse than FTX and everything else in terms of sentiment. That drop there, I think, I've lost the laser. I think rattled a lot of people. So maybe that is just a spike of even, incredibly dedicated crypto bros deciding that they need to sell. But for some reason, there's a big spike in selling there. Maybe it's because it's the first time retail had got into the market, properly into the market, and they just decided that was enough and they had to get out. We won't really know. Last one on the coin days destroyed, but this is the best one. This is the one that if you're going to do it, for me, this is the one you want to have a look at, and it's called valued days destroyed. And all we're doing here is we're taking coin days destroyed, but we're adding to it a price, the price of times it by the price of spending, so the time it was destroyed, whatever that price was. So again, with the example, 10 BTC for 100 days gives you 1,000 coin days destroyed. But if Bitcoin was valued at 30,000 at the time that you sell it, that's $30 million worth of Bitcoin days were destroyed. So again, what we're looking for, if you've got a high VDD, which sounds like you need to go to the doctor, but a high VDD, large old coins moving at a high price, taking profit potentially, market top, whereas a low VDD, not much is happening, and long-term holders are just selling. So a few long-term holders are selling when we're more in a accumulation phase. The reason I like it is this, it just looks cleaner to look at. And we've got these large red spikes that are coming in on the chart. So 2011, we don't quite get a red spike. I'm going to offer it an olive branch here and say, they just didn't have enough money, the value was low, wasn't particularly expensive back in 2011, and there wasn't people holding it that long. So it probably didn't get the furore that the other ones have had. But we can see it spikes up 2011 bull market, 2013 both times, 2018, but notice as several occurrences, each time it does, it dips back, comes back up, but you can definitely see that there's some in that run up on 2017, 2021, and then we've also got the ETF one. But far better in terms of visualization, just sort of like solely looking at the red areas now rather than some of the other spikes, because there are other spikes in there. The November 2018 is still there, but when we take in the value as well, it sort of just pulls that back down. So actually, VDD, as terrible as it sounds, it's probably something that you do want to consider having a look at going forward. Terminal price. Everyone's eyes are sort of still open, so I'll continue. Terminal price. I hadn't really heard of this one until I sort of ran my little Google search. And this takes Bitcoin's valuation, so it gives a calculation of Bitcoin's valuation by dividing the cumulative value moved from long-term holders, so VDD, we just discussed, by the circulating supply. So that little squiggle is sigma, which basically means summation. I don't know why it's on there, but anyway, valued days destroyed divided by circulating supply gives you the transferred price. Long way around it, told you didn't need to know. Then we take that transferred price, we times it by 21. So we get the transferred price of whatever it is, the circulating supply, so at the moment 19.8 million, and then we times that by 21 to represent the 21 million to give us an overall view of what that would look like against a fully diluted market. The long way of saying that is another pretty darn sexy chart, which looks pretty similar to Delta Top, but actually this one is far better because it really does stick to the peaks. So we hit the peak there, we hit the peak there, we hit the peak there, hit the peak there, and we hit the peak there. So actually this has done it all 5 previous bull markets. So what we're kind of saying is when price gets to this line, we're hitting the top. Again, we're not quite there at the moment. And if we want to zoom in on it, so again, April 14th, it wasn't the exact date, but trying to get this to snip at the same time as my mouse was moving, you kind of see the price, 62,800 and 60,600, so pretty much bang on top of each other. But if we roll forward to where we are at the moment, we're currently at 95, 96K. Well, if we were to hit the terminal price today for it to be the market top, we'd have to be at 200K. So again, looking at what Siam's predicting, 250,000 plus or minus 100,000, we're falling within the region because the market's not going to be over today, but in 6 months' time, that is probably going to go up another 50 grand if anything's to go by in terms of time and distance previously. I think the terminal price is a far better one to keep an eye on than Delta going forward. Going into a few more fun ones. Why do I call the Bitcoin rainbow chart fun? Because unfortunately for the Bitcoin rainbow chart, it started off as a rainbow with 7 colors. Now it's got about 14 colors to it because they keep on changing the metrics just to curve fit how prices moved. That being said, it's a pretty simple one to have a look at in terms of just visualizations. So yeah, boringly, it uses a logarithmic regression model to visualize where the trends were. Color bands to represent it, and effectively you just buy in the bluey green zones, you hodl through it until it gets to an orange or red zone in which you want to sell. And when it first came out, this is what it looked like. And it actually, fairly straight line, and we've had it breaching the top and the bottom. But when we moved, so this was 2018 top, or 2017 into 2018. People didn't like this because as we then went to 2021, it didn't quite fit, particularly with the dip in COVID. So this is the chart that we have a look at now. And this is the logarithmic nature. It's got that curve to it now. So it is kind of looking more like a rainbow than a straight line. But you can see we've added a lot more colors. The red's been split in two, the blue's been split in two, even the green's been split in two actually. And it's to capture this bottom level because we weren't happy with where the bottoms were hitting. But generally, it kind of just paints a picture of as we get to that top of a band, it probably is looking like time to sell. But rather than being in the red band now, we kind of moved down to the orange from the previous cycle. If we look at where that's going to take us now, I've moved this to end of November. I'm going to have to look off this chart. So the bottom of the orange is 150. And the bottom of the red, which I don't think we'll get into the red. Matter of fact, we only got into the sell, seriously sell last time. So that one there would be 318. So falling within Siam's characteristics there, plus certainly the plus or minus, both sides. This one is definitely a bit, I mean, you can have a look how serious this one is. Maximum bubble tail is sell, seriously sell. Is it a bubble hodl, stopped, still cheap, accumulate, buy, basically a fire sale. I mean, no one's taken this one too seriously. But I'd say this is probably the most popular one that's put out there just because I think visually it's quite well represented. This one, however, is one to take a look at. The 2-year moving average multiplier, it's super simple as well. And all we're doing here is we're just looking at periods of buying and selling. We're using 2 lines, which is the 2-year moving average, and then we're taking that 2-year moving average and we're timesing it by 5, hence the multiplier. And if it's below the green, you buy, and if it's above the red, you sell. And that's what it looks like. And again, 2011, 2013, 2017, 2021, it just dipped in. I haven't zoomed in enough. Great for spotting bear market bottoms as well. We're only interested in the tops right now. Looking pretty darn good. I did that there in case it was easier to see, but it's exactly the same chart. And then you can just see there that this has nothing to do with this circle. It just dipped into it, representing that one there, so it works. And then currently where we sit at the moment, I know it was a week ago, 95K. This is saying that the 2-year average, you know, we've got to cross that red line. So it's saying 261,000. So again, in Siam's ballpark. Did you look at my slides and then change your... No, I know you didn't, I know. So yeah, so looking quite good, suggesting that it might be a bit higher.
It's in my book.
So I've told you, I think my dad's nicked your book. It's gone since I showed him it anyway, even though it's been thrown in the bin. The Mayer multiple, this is a simple one, it's just a 200-day moving average. And then there's this sort of, I don't know, standard deviation, I suppose. Again, anything that exceeds 2.4 effectively says the market's heated. And this is what we see. I don't know if you can see that very well. I did it in that color as well, if that's better. Maybe it is. So we've got the Bitcoin price in orange now. We've got the 200-day moving average. and then we've got this standard deviation. 2.4 is like down here. See what I mean by curve fitting? I feel like they just keep changing this one, but that's where it is down that level. I should put a line on it really. But we can see the spikes are massively spiked in 2011, probably because 200 days was quite new to that then. Then we've got 2013, 2017, 2021, and sort of sitting in no man's land at the moment. But if we do stick by the rules of the 2.4, this is pointing out every single Bitcoin top. Now, for those of you that do watch the Avenger calls, you know how much I love a fib, so I can't not include the golden ratio. And this one's probably curve fitting at its finest, but I still like it. So it's based on the 350-day moving average. A lot of these are based on the 350-day moving average, but this uses numbers within the fib sequence to sort of help provide us with some sort of guidance of where tops would be, including the golden ratio of 1.618, but others, 2, 3, 5, 8, 13, 21. For those of you who have seen the Da Vinci Code, you'll know what the Fibonacci ratio is. It was created by our man, Mr. Peter Swift again. December 20, I think this was. So before the last bull run. It's hard to see. There's a lot of lines on this one. Don't worry, I've got some others. But we start at the top, it's 21. Then it goes down 13, 8, 5. 3 is the green. 2 is the, I don't know what color you'd call that, gray, light blue. The golden ratio is the orange one. We've got another then, 350 EMA is the yellow. Difficult to see, I appreciate. But it's also, you can find it on a Bitcoin Magazine Pro, but it looks a little bit different here because it's got these dotted, hashed out lines. There's a reason behind that. So I'll skip to the next slide and then I'll come back. But this is the one that, if I was you looking at it, I'd just gone to Bitcoin Magazine Pro. There is also, you can go on TradingView for this. But oh, it's not there, there it is. The reason is, so in 2011 bull market, the price took out both the 13 and the 21. I'm going to look this way. So the top two, so 21 and 13 were the two biggest numbers, took those two out. We'll go back and verify this in a moment. 2013, it hit 8. 2017, it hit the 5th multiple. 2021, it took out the 3 multiple. So again, looking at this, I'm just to point. So the top 2 lines there, is where the price hit. Then it took the next one down in this one. Then it took the blue in this one. No, sorry, it took so the 8 on both of those close together. Now I'm getting blinded by the projector, but you can see the blue in the 2017, the green in the 2021, and that just leaves us with where we've got to go. So all that this Bitcoin Pro Magazine one is doing is it's just getting rid of the lines as they've been used. So you can kind of see these top ones disappear, 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 and we're left with these two. So the reason they leave it on there is a high probability and then just the possible high. So the level 2 is the red line, and the 1.6 accumulation high is the green. I've got one that zooms in a little bit closer, I think, so just bear with me. I think I'll have to go back to this one. It is zoomed in a little bit closer. Hopefully we can kind of see it. Now, I think this is the first chart that one gives us a bit of hope that we've still got time to go, but actually, potentially may indicate that we've actually peaked. So, you know, just hear it out. If we're to believe that this chart has correctly identified previous tops, then we've got to look at what the data that we saw back in 2024. Because after this top here, we were left with the red and the green line. As we come back down, March 2024, it hits this red line. If we were to then use that data, or sorry, use the same scoring mechanism that this do, we'd get rid of the red line. It'd become a dotted line after that. We wouldn't have it anymore. So we'd just be left with the green. And the Trump pump hits the green line and then bounces off it again. So maybe this one's actually suggesting that we've peaked. Now, not a lot of the other on-chain data is suggesting that, so you know, it could just be an outlier, or it could just be, you know what, it's hit the red and the green plenty of times before, but because they weren't the top lines, it was nothing to worry about. Well, they are the top lines now, and if you're to believe this, it's only going to go as high as the next top line. So I'm unsure whether or not we really need to be counting this one, but it's certainly interesting how the past has affected it. And if it wasn't for the price action over the last sort of 12 months, we could still be looking at ranges to go. And so this is where it is. Oh, there's a few. So yeah, so they're the ones that it previously hit. So we can ignore those. So that's what's saying the price would be now. if it got to the 21 line, for example. But this is 2025. And it's kind of suggesting 150,000. So the bottom of Siam's range, but 150K level for, and that is for the end of 2025. I didn't, the screen was absolutely tiny if I zoomed across, but you just have to trust me on that one. Or if it just gets to the golden ratio, it's only 118, which is only 10 grand more than what our current top is. So just something to bear in mind. As I say, could just be an outlier, but it's definitely one there. Right, a couple more. Don't worry, we're getting close to it. Now, these are more ones that you see on TradingView, but they're simplistic ones that people love to talk about in terms of previous market tops. And it's the RSI. It's a simple one there. I think most people know what the RSI is. And we're just looking for momentum. On the monthly, seems a bit strange, but in the change of speed of the price. And when we have a look at that and overlay it on top of it, so this is just a monthly Bitcoin chart. This is the RSI. There's no settings that I've changed on this. It's just a standard one. I've just taken out that curve fitted moving average yellow line that normally fits in there. We've got this orange line which represents 90 on the RSI. And every time it's breached above 90, it's marked a market top. And that's worked for, well, I couldn't get the 2011, so that's why it's not there. But that's worked for 4 of the last 4. So potentially there. Where are we right now? We are above 70, but we're nowhere near 90. The monthly is going to move a lot slower. Whether or not you want to take that one on its own, yeah, maybe not. Another one which I've certainly talked about, money flow index, or MFI. It's effectively another RSI, but instead of just being price, it includes volume. So we're not just seeing how the price moves, we're seeing how many people are actually transacting in either direction. When we overlay those two on top of each other, you can actually see they both still align to the same rules. So there's the 90 line, we're in this bottom box now. And again, every time it goes above 90, it lines with a market top. It lines with the RSI, which you'd expect, bearing in mind that half of it is taken from the RSI. So these two together on the monthly chart do seem to suggest that it can identify a market top. Whether or not you want to use them, are they too simplistic to you? I'll leave that to yourselves, but the evidence suggests that they can. Moving on to a couple of other ones. These are the last two, I promise you. Don't think we can not talk about the power law. Most of you in the room probably are familiar with how the power law works. Giovanni, we've sort of applied that to Casper quite a bit, but I'm going to stick just to Bitcoin here. For those of you who need a refresher, the power law just focuses on two main things, fair price and the bottom price. Fair price effectively is just where the price of Bitcoin should be over time, and anything above that is considered overvalued, anything below it is undervalued. And the idea is that the bottom price, Bitcoin cannot fall below that. I put that in inverted commas and italics because the very first thing it did was drop below it. And I always think people who use the word can't in crypto is just a challenge accepted type approach. So we never rule anything out, I certainly don't. So we've got the blue line, which is the bottom, which aside from 2009, has worked very well in terms of bottoms. And this is a log chart, sorry, I should say. So most of the charts you've seen before are linear log, so the date's linear and the price is log. So you can see that this is log as well. Now, everything's a little skewed off from this because we know that the Bitcoin top in 2011, but this is saying it was in 2010. I think this is just an error with Bitcoin Pro magazine because the 2013 stuff's in 2012, the 2017's at the beginning of 2017, you get the point. So, but the chart itself is done log, just so you can have it in a nice straight line rather than the curve we normally see. And then you've got the orange fair price. Now, the problem I have with using the power law to indicate market tops, which people try to do, is by its very definition, anything above the average price or the fair price is overvalued. So how can you accurately decide where that's going to be? The power law doesn't go into a ceiling price, but there is a ceiling price, so I think people are just conveniently drawing that on. And it did hit for 2011, one of 2013's 2017, but didn't hit in 2021. That being said, if it does work this time around, we hit a ceiling price end of November, beginning of November, it's what, just over 500,000 for Bitcoin. I'm not convinced that this is really the one you need to be going towards for trying to understand whether or not we can see a market top, but there it is. And we can't have the power law without stock to flow. This is by Plan B, and whether they deliberately meant to do it or not, they have started a generational blood feud between each other here. They absolutely hate each other online because they just have taken the data and assessed it in two different ways. And stock to flow was here first. Power law's obviously trying to, build some credibility in what it's seeing. But yeah, for some reason, these two absolutely hate each other. But there's an issue with stock to flow, just like there's an issue with the power law, and it's the fact that we can't take the data very accurately. There's no accurate assessment of the data. Even within the description of stock to flow, it uses the word estimate constantly. So estimating the price level based on the number of Bitcoin available to the market relative to the amount of Bitcoin produced or mined each year. A long way of saying that it's all based on supply and demand. And because Bitcoin supply is reducing, then its price is going to increase because demand will increase over time. There's not enough for it. This is used in gold quite a lot. But the point is down here, it's an estimate of future price. And I despise people that's a strong word. I question people that put this on as a way of accurately identifying the Bitcoin price, because most of them do take the data incorrectly. They go, well, yeah, but the brighter the color marks the top. The color has nothing to do. The color, if you actually read the chart correctly, is just days away from the halving. So it forms a 4-year cycle, and yep, 4-year cycles in the past have previously sort of had a similar time frame from halving, so the color's always the same. It's got nothing to do with price. The stock to flow level is just this line here. So for me, there's no real assessment as to whether or not this can really tell the market top, because it spends just as much time above it as it spends below it, whether that be in a bull or a bear market. So I just take it with a pinch of salt.
He shifts the lines down as well. It used to be $1 million.
Right, okay.
It's now 500K.
Right, well, there we go. I mean, that's a common theme for a lot of these, is that they curve fit a lot. So where's that put us with the results? So I've just applied an arbitrary scoring system to this, and you don't have to take it with a pinch of salt. But where do we kind of see things? So the key ones up at the top here, I should say, we're not talking about bottoms, but I have for the spreadsheet just marked those that identify the bottoms, but it's not really included within the scoring because it's not fair, because not all of them are even look into it, never mind correctly identify them. But obviously green it hits, blue it slightly hits, red it doesn't hit, and grey is not applicable. But it seems probably down to 6 have some serious credibility about themselves, and you may want to consider them. So that's the 2-year moving average, the Puell multiplier, MVRV, new pools, terminal price, and the golden ratio. The rest, I think there's some legs to it. Pi Cycle, the first one I talked about, the only reason it scored so low is because it just doesn't cover 2011. But that could just be because the data didn't go back to support it in what I was looking at. So maybe that one deserves a bunch up. But you can see, when we get down here, things like the RHODL, Bitcoin Power Law, and stock to flow are almost not even worth your time looking at. Same with the rainbow chart, as fun as it is to look at. And I'm not going to go through these, don't worry. But just some to store in your subconscious in terms of ones for Bitcoin bottom that, whilst I was looking, really stood out to me. Long-term holder realized price, every time it dips below is a bottom. Balance price, there are definitions to these, but I won't go through it. It's nearly lunchtime. But again, balance price, every time it dips below, so far has been perfect. And then we've got to include one from the coin days destroyed. So this one is the cumulative, I can't remember what the term of it is now. I think it is that, but it's got another word in the middle that they don't include within this. But again, every time it's touched the bottom of that has been an ideal place to buy. So can you pick a Bitcoin top? No. But there are some charts out there that if you just give them the time of day, they may be able to help you. And I'm not telling you that you need to look at these every single day, but perhaps if you have you can just save them on your web browser and maybe put a date in your diary, like once a month, once every 2 months. Just go on to those charts that you choose the right and just see if everything is shifting in the right time. We used to always think of on-chain data as sort of lagging by 6 months, but actually those charts there, they update all the time, and they're taking into account where the market is regardless of sentiment. And sometimes, Siam talked about it in his last presentation, we get caught in sentiment. And it kind of just completely overrides the data that we're actually seeing. And sentiment is just a bunch of people just moaning about stuff, really, or being happy about stuff. And you know, if you're not willing to just step outside of your comfort zone and just think, can I question that? Is it right to just go on what some random person on Twitter is telling me? Well, actually, there's plenty of charts out there that are probably going to give you a better indication than just getting lost down the doom scrolling that is Twitter. That's it from me. You'll be happy to hear the charting is over and it is lunchtime. So thank you very much. Yeah.